Okay, we are up and running to the All-In Advisor Access podcast. I'm your host, Blair Barton, Senior Financial Advisor and CEO of Auxiliary I&I Financial Services. Very excited today to be joined by Thomas Juha of RBC Insurance. Welcome in, Thomas.
Thanks, Blair. Thanks for having me on the podcast today.
Yeah, no, it's our pleasure. And I know we've been working quite a bit side by side with yourself and Chris, your inside. It's been a really great experience. I'm a huge fan of your DI product, and actually, it's been a very beneficial partnership because you guys have a 10% going off on your term insurance right now, which has brought a lot of people in. It's been great working with you guys the last little while, and looking forward to doing some more down the road. Actually, we have some more apps to go into business with you guys with over the next couple of days. So. Looking forward to continuing that relationship. Let's talk about your role in specific, and then we'll talk maybe a little bit about how Chris works in that with you and how you guys work as a team.
Yeah, so a little about myself. I've been at RBC Insurance for 5 years now, just under 5 years. I started right after university as an inside wholesaler. So how our partnership works is we work with independent financial advisors like yourself, Blair. Some of them are independent advisors. Some of them are with like a channel like Sun Life or a bank brokerage like RBC Dominion Securities or CIBC Wood Gundy. So we work with advisors and help with their insurance recommendations, as well as getting all their policies through underwriting, and basically helping advisors, with their insurance policies. So basically life insurance, disability insurance, and critical illness insurance. So my role, I'm considered a senior sales consultant. And basically what that is I'm out there with advisors, training them, joining in on larger cases, and really working on cases that they have going now. So helping with the advice, making sure they're absolutely doing the right thing for the client, and showing different options for the client. And I work with Chris Coleman, who's my inside wholesaler. And I started as an inside wholesaler at RBC and worked my way up the same way Chris will. But basically, he's my right-hand man. So we're both licensed and can join in on calls and basically have the same job and work as a team together.
Yeah, and you guys certainly do work really well as a team together. And that was the first thing that I noticed. Just kind of shopping the market for DI that really works for, can complement a lot of deals. But you guys have really shown me that it can be kind of a comprehensive solution to go to RBC Insurance when it comes to your insurance needs, and kind of work together with your term, your life, your CI, and your DI.
Yeah, to that point, I'm very lucky as a wholesaler, and I think Chris would say the same, that we do have a wide range of solutions for our clients. So we have a full life solution. So we have a term life that's always really competitively priced for people during their working years, and that can be converted to permanent life insurance. And that's what a lot of people are looking for with their term insurance, is the ability to convert. So we have participating life, we have term 100 and universal life. So really the full range of permanent solutions. And then when it comes to disability and critical illness, that's really where our bread and butter is. And that's really where our advice leads in the market, we find. So RBC Insurance wasn't always big living benefit leader. So living benefits referring to benefits that pay out while someone's still alive. So disability insurance and then critical illness insurance. So in the early 2000s, when all the life insurance companies like Manulife, Sun Life, Canada Life were acquiring smaller companies, RBC Insurance did the same. So they acquired a couple companies, mainly Paul Revere Life Insurance Company and Unum Province. So they had all kind of merged a couple years before that. But that's really where our big disability block comes from. So we own about 60% of what's called the non-cancelable DI market, which is basically policies with guaranteed provisions, guaranteed benefit amounts, comprehensive definitions. So really, and not a lot of exclusion. So really the key products in the market. So we're very lucky to have that product on our shelf. And I think we have about 60% market share on that year over year. And ultimately we only have two competitors in that. It would be Canada Life and Manulife in that market. But they're all great products between those three companies. And so that's really who the DI players are.
Yeah, that's fantastic. And it's funny, just to go back to working with Chris, I know I just got a notification just reminding myself that one of our teammates actually working with Chris on 2 policies this morning. So we're taking up the team. So, we're taking full advantage of you guys today.
Yeah.
And just quickly before, we put out this post and to our email list, some questions for you. But first, I just want to quickly touch on your new e-app for your life. How is that going? Because I know we're getting into that later tonight.
Yeah, it's a pretty streamlined process. So as an advisor, you log on to our advisor center, it's called the Business Intelligence Center. Fill out the app with your client through Zoom or through the phone, and then you put the client's email and cell phone number in there, and they'll get an email. And then also when they open that email, they'll get a text message with a code to put in the email, and then are able to sign digitally that way. So it's basically kind of end-to-end digital within the application process.
All right, cool. Yeah, definitely looking forward to using that tonight. I got a meeting right before dinner, and it's on Zoom, and it was super convenient these days to be able to satisfy clients' needs instantly, right? So, really looking forward to that. It's exciting to see these adjustments that we've made during this time, and just really come so far. And I know as an advisor, the days of driving all over Ontario are over for the most part. I mean, depending on who you work with, and I know for us, we always pick the best solution, which includes having these options available. So, congratulations on that. I know that just launched recently. So, and again, we're putting through a couple this evening. So great stuff. Okay, so we're going to get into your DI product. We sent this out to our email list. They sent us the answers. Okay, so they want answers on DI. And we're going to ask them right now. So
awesome.
You are a specialist in disability insurance. What are some of have for people in regards to looking at disability insurance?
Yeah, I would say it really comes down to going to a broker, going to get some advice that really makes sense. Disability insurance is a little bit more complex of a product, but once you put it in place and you do it right, it'll really last forever. And people don't see themselves replacing those policies when they're done right. So I would say take the time to do your research up front. And, like any piece of insurance, ask those extra questions of an advisor. Like, is this what you do on yourself? What am I missing here? So disability insurance, term insurance, what we find is that it's very price sensitive, right? People are looking for kind of the cheapest rate in the market. With disability insurance, obviously price is always a factor, but if you start looking for the cheapest thing, that's really where people are going to lose out on valuable claims in the future. So disability insurance products have all sorts of different features, whether it's guaranteed rates or not guaranteed rates. Some of them have more exclusions than the others. A good disability policy will only have 3 exclusions. Those are acts of war, normal pregnancy, but complications of pregnancy are covered, and periods of incarceration. So you'll see some disability policies that have full mental health exclusions when that's the biggest claim. Some of them have limitations for how long people can claim for soft tissue injuries. So really is a wide range of products in the market. The other thing I should note is that some disability policies, basically it's called financial underwriting at application time versus done at claim time. So we could underwrite someone while they're an employee making $500,000. On some plans, we'll guarantee that amount on the policy schedule. Other plans, at claim time, the client will have to prove financials. And if their income went down to $100,000, well, they're not going to be covered for as much as they paid for. So you really get what you pay for on disability. I would say don't necessarily pay the highest price. Like, don't be focused on that, but ask those extra questions. Like, what does this mean for me if this happens? Really think critically of what could happen, because what we find with a disability insurance product is, it costs a little bit more than term insurance because more people become disabled during their working years than die. That's an absolute fact. And so you will know someone that becomes disabled. Lots of people are becoming disabled for all sorts of things, whether it's cancer, strokes, heart attacks, mental illnesses. And so it's really something that you want to review in your financial plan and make sure that there's at least a plan in there if a disability were to occur.
No, that's a great point. And, a lot of clients, you're right, are definitely sensitive to the term insurance. They want a good rate. But when it comes to disability, I find, and through educating the client through the process and showing the statistics, they don't seem to mind spending a little bit more money on a DI that's going to actually cover them. Because there's just no point in getting DI if you're not going to get the proper coverage, because you're not going to get what you need. So definitely do your research. have a good conversation with your advisor. Make sure you're doing the right thing for you and your family, and covering off your needs and your assets, properly, going through that, if you're going to go through that channel, right? I got another question for you. This is actually from our co-host who wasn't able to join us today. Many people have long-term through their employer. Is that enough? Or what are some things they should keep in mind?
Yeah, like many Canadians, including myself, have disability insurance through their group benefits provider. So me being an employee at RBC, I have group disability. So it's really just key to review what that is. Every group disability product is a little bit different. There's some basic provisions in terms of how the definitions work, and they're usually not very flexible for working part-time or, disabilities after 2 years. They really fall off after that point in terms of the comprehensiveness. But what's key to remember is you need to review your coverage specifically, because there's a lot of things that can happen in terms of how much you're actually covered for based on your earnings. So some of the things that will exist will be a non-evidence maximum in the plan. So if maybe my group covers me for 66% and 2/3, but there's what's called a non-evidence maximum, an NEM, of 3,000. That means in order for me to get more than 3,000, I have to prove my health to the insurance company. Okay, so groups will all have a non-evidence maximum. It might be a high number, it might be a lower number, and that really affects what ultimately people get. And the higher someone's making, the better chance they have of being underinsured. The other thing that happens is some plans, the benefit amount will be taxable at claim time. So you might get $3,000, but it's taxable. Other plans, it'll be tax-free. So it's a very different amount that you're actually going to be getting. And what we also find too is that there's a definition of earnings is that the percentage of what people are covered is based off of. So sometimes you'll have someone that just makes salary, and maybe they'll get 66% to a maximum of $5,000 of just their salary. But then you have another person who makes $50K salary and $100K commissions, making $150K. Well, their group benefit plan most typically will be just based off their salary. So there's a lot of different factors at play of what actually someone gets. And then what we find is that the definitions on group plans are less comprehensive than what people typically buy on individual insurance too. So it's really important to review your options of what you actually have, and go to a solid financial advisor that really has an understanding of disability and how to go through those booklets, because it could ultimately lead you to being absolutely totally underinsured. The other thing I should note is that those group LTD plans are not portable. So, everyone talks about how millennials are never staying at companies. Whether that's true or not, people are leaving companies all the time, or people are becoming contractors and self-employed. So what we find is the older someone gets, the better chance they have of actually wanting to become a contractor or a consultant. So working for a very similar company, but becoming a self-employed consultant. Well, at that point, they lose their group LTD, and maybe they can get insurance, maybe they can't at that point. Right? Maybe their health has changed. The older you are, the harder it is to get insurance. So it really is important to look if you are leaving your company, or even if you don't plan to leave your company, anything can happen where anyone can lose their job, and we've seen that during COVID, obviously. So it's so important to have a portable disability plan. And a great part about a lot of these individual disability plans is they have a provision on there that if you lose your group LTD coverage for whatever reason, you can add back whatever you lost within 90 days of that. So it really, you can add some guaranteed insurability on these individual plans as well. But first and foremost, review it with a professional. Provide your documents of your group LTD booklet to that professional, and they'll be able to help you out and see what your options are there.
Absolutely, and it's funny that you say that, because that is a bit of a majority of the conversations I've been having with people who are, they don't want to leave their job right now. There is a lot of uncertainty in that market these days, and people are sort of thinking, what would I really like to do for a living to work for myself? And they're asking these questions like, when should I start looking at my own kind of coverage, as opposed to, just waiting to see what's going to happen. Because, a lot of people, they've been looking at this stuff over the last year, saying, is this something convertible if I lose my job, or if I want to leave, right? So those are really great answers and very informative. Thank you for that. I'm sure Eddie will be happy with that. Another question here. Do you see disability insurance as something that is very important for people buying life insurance products now for the first time?
Yeah, absolutely. Like, I mean, when someone's buying insurance, I think the biggest thing to remember when we say life insurance products, we're looking at, what happens if you die and what happens if you live and can't work typically, and what happens if you get sick, right? So that'd be any product that's life insurance, like typical term life or permanent life covering a death, long-term care insurance, and then critical illness and disability insurance. So, ultimately what we see is that term life insurance rates as a whole have been going down for a number of years. And the reason for that is because less people are dying during their working years, because healthcare is getting better. There's, obviously a ton of health advances, but what we find is that people are living with implications, right? So that person who, got a stroke or got cancer, and maybe 15 years ago they would have passed away. Well, now they're living longer, but with implications and often unable to work. So we'll see people that, one claim I just came across, the client just passed away after 8 years with cancer. Well, they were unable to work for majority of that time, about 7 of those 8 years. There was a gap in between where they went back to work and really wanted to work. But she would have been dead 12 times over 15, 20 years ago. So healthcare is getting better. It's keeping people alive for longer, but with implications. Mental health is another trend, what we're seeing more of. More people are taking time off work because of mental health, which is covered under most disability insurance policies. So yeah, it's an absolutely greater trend. I think a lot of people buy life insurance because their parents bought life insurance and their grandparents bought life insurance. It's kind of, in some ways, like a rite of passage. But ultimately, those grandparents and parents had different needs than we do today. Their healthcare systems were totally different. Their lifespan a little bit different as well. Their chance of dying during the working years are completely different as well. But the disability need has never really changed. It's always there. And during people's working careers, they have a better chance of becoming disabled than dying. Actually, at any point in their life, they have a greater chance of becoming disabled than dying.
No, absolutely. And, that's a great point that I don't know if a lot of people realize, but it's becoming, I've noticed over the last year, a lot more people are realizing that, that could be a possibility, that, once they get past the idea, and, for us having clients, like you mentioned, it's a very tough job that way. When you have to, go through this road, and meet people with certain, sicknesses and stuff like that. But, what if they get sick now, which is a, very high probability, over the next couple of months, they will be, they'll be covered properly. So people are understanding that, life isn't just going to cruise through exactly the way you planned, and you have to put in some protection for you and your family. And the younger that you do these things, the better that you're going to have it. And that's just the reality of the situation all the way around. Like, I think you would agree on that.
Yeah, it's really about guaranteeing your insurability, right? Like if I'm looking at my insurance for the first time as someone who's maybe a new homeowner, maybe just had kids, like I'm looking at, okay, here's my budget, but how can I get in the door for a wide range of products? How can I get in the door for life insurance, start myself out with that with a comfortable face amount? And then how can I get enough disability insurance where in the future, I don't have to prove my health again to the insurance company? So it's not really just about covering myself for today. It's about making sure I can still have options down the road with my insurance plans. And something you said there, Blair, like, COVID obviously was a humbling experience for a lot of people within their financial plans, right? Like last March when that happened, people are losing their jobs. People are, still are unable to operate their businesses the same way. Lots of people have losses of income. And they're not sick in a lot of cases. They're just have to shut their doors or lost their job, right? So when we think of a disability, it's the same thing. You've lost your income in a lot of cases, or some of your income, and you're having to deal with an illness as well. So the last thing you want to think about is your financials. And so what's key to remember is with a lot of good disability insurance products, it allows you to continue working in the future. So we call this a residual disability benefit. And basically what that is if someone has a loss of income because of a disability, it'll pay out a proportion of your benefit. So basically like a little top up to your income. So it's not always like, full house burned down disability. It's sometimes people just losing 40% of their income because of the disability, and a good product will top you up on that.
Fantastic. Yeah, absolutely agree with all of that. I know we both got a busy morning, and we got one more question here, and then I'll let you get back at it, and we'll harass Chris this morning as well. So getting some work done. What are some criteria you would say a young person should look at when doing their life insurance planning?
Yeah, like I think, first and foremost is like covering your needs right then and there. Like what's going to happen in the short term? Like, do I need an amount of life insurance for the short term to cover my debts, or, do I have dependents? And then, disability, no matter someone's age, as long as their income matters in their financial plan, there's a need or a talk about disability insurance there. What happens if I can't work, can't earn an income, right? So it's looking at the wide range of things that you would need, but also just planning for the future. Just because I myself don't have kids now doesn't mean I'm not going to have them in the future. So locking in a life insurance amount that I can grow with in the future is something that I choose to do. And so it's looking at, what your goals are now, what your future goals may be, and make sure you have insurance policies that are going to be able to cater to that. So with disability insurance, I myself started out with a benefit amount when I first started at RBC, and then I can add on to that every year without proving my health, right? So it's really looking at if something changes in my health, I don't have to go buy more insurance and struggle to get insurance. I'm already kind of locked in for, what I can get. So really looking long-term, looking at guaranteed insurability, and knowing that, starting out with something is better than nothing. Even if, an advisor recommends $3 million, $4 million of life insurance for a client, or I think it's, getting something is better than nothing. So the worst thing that I think a client can do is just take nothing. You can start out with a policy, you can grow with that policy. But the worst thing you can do is wait till next year on it. It's always good to start out on something, and Rome wasn't built in a day with a good life insurance solution.
Absolutely. A fantastic answer. Couldn't have said it better myself. And, I might actually take some notes on some of what you said when I go back and watch this tonight when it goes live at 6 p.m. So fantastic, chatting with you today. It was this is going to be really great. And I know when we poll our mailing list, every couple of weeks, asking what they would like to see. And this was really something that they're interested in, and this is one of the best ones on the market. And dealing with you and Chris have been fantastic and super helpful. It's just been an absolute pleasure, and I really look forward to building this relationship through us and our advisors here at Auxiliary I&I. And thanks so much for your time today.
Thanks for having me, Blair, and us as well. We're looking forward to a continued partnership.